Welcome back to Coffee Tea Money Talk, where we explore practical financial ideas through real life situations. Today's topic is true wealth, what it means, and how people are planning for it. Is it retiring comfortably, taking a break from work, or supporting your family without financial strain? As usual, this discussion is for educational purposes only and does not constitute financial advice. To discuss this, I'm joined by Kieran, a financial advisor, and Ben, who's thinking about her long term financial plans. Welcome both.
Ben, let's start with you. What does true wealth mean in your situation?
For me, it's having options, maybe taking a few months off work, or switching careers without worrying about income.
That's a common perspective. Many people today define wealth less by a number and more by flexibility, being able to make choices without financial pressure.
So it's not just about accumulating money, but how it supports your lifestyle.
Exactly. Ideally, your financial plan continues working in the background, whether you're working, taking a break, or transitioning into retirement.
So, Kieran, what are some approaches people are using to achieve that?
Some people explore options such as indexed universal life insurance with an income benefit, which are designed to combine elements like growth, protection, and income. The specific features vary by provider and policy terms, so it's important to consult a licensed advisor before making decisions.
How does the growth part work?
It's linked to market indices, which are benchmarks that track how groups of investments perform. For example, the S&P 500 tracks 500 large companies in the US economy across sectors like technology, healthcare, and finance. If companies like major tech firms or consumer brands perform well overall, the index rises. If the broader economy slows, the index may fall. This is a simplified example for illustration only.
So instead of investing in one company, you're tracking a broad market?
That's right. It provides diversified exposure. In this type of plan, you may benefit from market upside when indices perform well. At the same time, there's typically a floor rate, which helps protect against losses during downturns.
So it's designed to participate in growth while limiting downside risk?
Yes, balancing both is the objective.
Let's talk about income, something many people prioritize. Definitely, I'd want something that provides regular payouts, not just long-term growth.
Some plans may provide monthly payouts, potentially for life, depending on the structure and conditions. Once payouts begin, you receive a regular income stream. That income may increase over time if credited returns are positive.
But markets can be unpredictable. What happens during downturns?
That's an important point. Markets do react to real-world events. For example, during the COVID-19 pandemic, global markets experienced sharp declines. Interest rate hikes in recent years have also led to market volatility. Geopolitical tensions, such as conflicts in the Middle East, can create short-term uncertainty.
So in those situations, income would decrease?
These plans are designed to lock in higher income levels once reached, so later dips in markets performance doesn't reduce payouts, subject to policy terms.
So increases can be captured, but declines don't reduce income?
That's the intended design, growth with a level of stability.
Let's talk about flexibility. People's lives change, career shifts, family needs, unexpected events.
Flexibility is a key feature. Typically, you can choose between single or multiple premium payments, allocate funds between growth-oriented and more stable accounts, start, stop, or restart income payouts.
So if I takes a career break or goes back to work, I can adjust accordingly?
Yes. For example, you might start income during a sabbatical, then pause it when you return to work, and restart it later during retirement.
That aligns more closely with how people actually live today.
What about protection and long-term planning?
These plans often include life coverage, which provides financial support in the event of death or terminal illness. They can also support legacy planning. For example, a policyholder may transfer ownership to a spouse or child, or designate beneficiaries to receive payouts over time.
So it's not just for personal use, it can support future generations?
Yes, some plans include life coverage and can support legacy planning, such as naming beneficiaries or transferring ownership. In certain cases, policies may even continue across generations, depending on design and approval.
So it addresses both current needs and long-term planning?
Let's wrap up. Ben, what stands out to you?
The flexibility. The idea that income, growth, and protection can be adjusted over time based on real-life needs.
That's the key idea. Financial plans should adapt as circumstances change.
True wealth is not just about numbers, it is also about having options, stability, and greater confidence in planning ahead. Certain life insurance solutions may offer a combination of protection and flexibility, subject to policy terms, conditions, charges, risks, and suitability. Features vary across providers and policies. To understand what may be suitable for your personal situation, please consult a licensed financial advisor representative. Until next time, this is Coffee Tea Money Talk.
If this gave you something to think about, hit subscribe and let us know your take in the comments. See you next cup.